Apple announces largest ever $110 billion share buyback as iPhone sales drop 10%. And I'm not going to sugarcoat it. Apple is essentially propping up their stock price, which is pretty common for large companies to do. When stock prices are showing signs of going down, obviously the CEO and the board, they don't want that. So they will purchase their own stock in order to get stock prices back up because technically the demand has increased, even though it's Apple themselves that are doing it. And it does actually appear to be working. If we look over the last year, you can see their stock price it's had some rough moments and some good moments, but this is where they purchased back the stocks, and it's been going really well for them. Things had not been going as well as they had hoped, and so they're buying back their own stocks, partially because the iPhone sales have dropped, and there are some other reasons as well. But things have also been going pretty bad for Apple very recently. As you can see here, Apple shows its steepest quarterly decline in iPhone sales since the pandemic's outset. Apple on Thursday disclosed its steepest quarterly decline in iPhone sales since the pandemic's outset, deepening a slump that's increasing the pressure on the trend-setting company to spruce up its products with more artificial intelligence. The 10% drop in year-over-year iPhone sales for January through March period is the latest sign of weakness in a product that generates most of Apple's revenue. It marked the biggest drop in iPhone sales since July through September period in 2020, when production bottlenecks caused by factory closures during the pandemic resulted in a delayed release of that year's model. The current iPhone's downturn was the main reason Apple's revenue for the last quarter decreased 4% from last year to $90.8 billion. It marked the fifth consecutive quarter that Apple's revenue dipped from the previous year. Apple's profit in the last quarter totaled $23.64 billion, or $1.53 per share, a 2% dip from the last year. And it's probably not particularly surprising if you've kept up with Apple news that their products are struggling to sell quite as much and that they're having a year-over-year declines, not so much in their total profit, but in their projected profit. They are not hitting the numbers that they had anticipated. And this is probably not particularly surprising to you if you've been keeping up with what's been going on, and you might remember articles like this one. Apple's Q1 smartphone shipments in China tumble 19%, data shows. Apple's smartphone shipments in China tumbled 19% in the first quarter of the year, the worst performance since 2020, as the iPhone maker took a hit from Huawei's new product launches in the premium segment, market data showed. Apple's share in the world's biggest smartphone market fell 15.5% in the first quarter from 19.7% a year earlier. That put it almost level with Huawei, which saw sales jump 70%, according to the research center Counterpoint. See, China is a really important market for any Western companies that are looking to grow, especially in the smartphone sales department, because the smartphone saturation in China is pretty small compared to what it is in the United States. In the US, we have smartphone saturation of like 90%. About 90% of America's population has a smartphone, so there's not so much room for getting new customers here. Pretty much all your profits are going to be people upgrading from their current phone to whatever new phone is put out. However, in China, the smartphone saturation is something like 72%. 28% of a 1-point-something billion person population is a lot of potential smartphones that could be sold by Apple, Huawei, Vivo, and whoever else is trying to get into the market. There is an unfathomable amount of money to be made if you can be the predominant smartphone maker in China, which Apple initially was doing really well at. Then a lot of things came along, like the COVID pandemic, China not particularly being super friendly towards American or other Western companies, a lot of Chinese patriotism to support local companies like Huawei and step away from larger American companies like Apple. There have also been a lot of sanctions either by the Chinese government against Western countries in retaliation or in anticipation of them doing well, because the United States has also made sanctions on China, so China's basically doing a getting back at them by trying to force out companies like Apple. And not only does Apple absolutely hate this, but it's having an active impact, a negative one, on their sales and their stock price, because basically the largest smartphone market that they could get into, they're losing out to other companies. Now, Apple did actually have a response to this, but as usual, it is corporate PR garbage. That response is right here. But first, if you like these kind of daily business and finance updates, I post 3 to 5 times a week, and I would love it if you gave me a subscription and came back and watched some other videos. So this is what Apple, led by CEO Tim Cook, said. Cook told CNBC that sales in the fiscal second quarter suffered from a difficult comparison in the year earlier period, when the company realized $5 billion in delayed iPhone 14 sales from COVID-based supply chain issues. If you remove that $5 billion from last year's results, we would have grown this quarter on year-over-year basis, Cook said. And so that's how we look at it internally from how the company is performing. Except that's obviously not how you're looking at it internally from how the company is performing. Because if you did, then you wouldn't have approved and initiated this $110 billion stock buyback. You would be just fine with your stocks dipping a little bit now, because in the next year, when you don't have those COVID-related supply chain issues from the iPhone 14 delay, you would get all that money back and your stocks would absolutely skyrocket. This is basically just Cook's PR statement to try and keep investor confidence by saying, oh no, we would have totally made it if we hadn't had this thing that was totally out of our control. But don't worry, it's not going to happen next time, when realistically they know what is happening is an issue in China, not actually probably a COVID-19 related pandemic supply chain issue, yada, yada, yada. But they're just trying to cover because they don't want their investors to get scared and bail, because that would negatively impact their stock prices. Now, you've probably seen headlines like the end of Apple or will Huawei take Apple down or stuff like that. But Apple is absolutely going to be fine. And probably they're going to be more than fine. Probably here in the next few months or maybe in the next couple of years, they're going to announce a bunch of AI stuff, which is going to bring back a ton of consumers and investors into Apple because everybody loves AI at the moment. But in the short term, they don't want their stock prices to go down, especially when they have the money to purchase them back up so that their executives can get those juicy, juicy stock incentive-based bonuses. Thanks for watching.